So in this video today, we are going to be doing a deep dive and analysis on a stock that I recently started purchasing a couple of weeks ago, and it's a stock I've been getting a lot of requests about down in the comment section below, and that is American Airlines stock. Now, last night I was scrolling through YouTube, watching YouTube videos because I have nothing else to do with my time, like most of you guys as well stuck at home, and I was watching a video that Jeremy from Financial Education put out doing an analysis on Carnival Cruise Line stock, and that video absolutely blew up. And so that got me thinking, and I realized there's a lot of stocks out there that have fallen massively in the last month or so, and I think a lot of people are wondering whether or not this is a buying opportunity for these stocks. So I just wanted to give Jeremy a shout out for the inspiration for this video, and we're specifically going to be talking about whether or not American Airlines stock is a buy, trading around $9 per share today. So just for a bit of context here on American Airlines stock, here is the current situation with them. Back in January of 2018, this stock was trading near $60 per share, and then they began going into a downtrend in late 2019 through 2019, which is way before the current crisis even started. Now, as soon as the virus hit, American Airlines stock sold off massively, just like many other travel-related stocks did as well, because the travel shutdowns and travel bans and fears of the virus spreading have absolutely crippled the travel and airline industries. On February 12th, before the sell-off began, American Airlines stock was trading at around $30 per share, which is 50% of what it was at the 2018 high, when it was trading at $60 per share. So before the virus even started, American Airlines stock was already down about 50% from their previous high over the last 5 years. And then just 1 month later, American Airlines stock was trading for less than 50% of where it was in February, down to $14 per share. And now it may have caught support around the $10 per share range. We'll be able to tell by the end of the day today, but as of making this video, it dropped back down to $10 and fell below that and is now trading in the high 9s per share. So the stock may have found some support here around $10 per share, which was the closing price on March 20th. After that, the stock rallied to $15.66 per share shortly after coming back down to $10, and as of making this video, falling slightly below 10. So is American Airlines stock going to go back up? Is it going to go back down? And is it a buy right now? That's exactly what I'm going to be sharing with you guys in this video. And I just have to make this quick disclaimer here, guys. This is merely my opinion. This is not financial advice, and you should always do your own due diligence before buying or selling any stocks on your own. And the reason why many people are asking themselves if American Airlines stock is a buy is because they are currently down about 85% from the 2018 high of about $60 per share, and they're also down 66% from where they were when the virus began spreading, when they were initially at around $30 per share. And a lot of people are familiar with the expression of buy low and sell high, and we also know that Warren Buffett is somebody who invests heavily in airline stocks, and he does own shares of American Airlines. So is it time to buy into the airline stocks and follow Warren Buffett? Well, let's talk about that right now. Now, before the virus even started, as we said, American Airlines was already having some trouble. The stock was down about 50% from where it was at their 2018 high. And so what were the reasons behind this? Well, their Q4 earnings report that came out in January fell short of revenue expectations and earnings expectations. So going into this, they weren't doing too great as far as revenue and earnings. And a lot of this was due to a crisis that happened with the Boeing 737 MAX aircrafts, where we had 2 fatal crashes that resulted in the FAA grounding these planes as a mandatory measure. And so essentially what happened here is many of these large airlines, including American Airlines, took delivery of these new Boeing 737 MAX aircrafts, and after there were 2 fatal crashes, they were required to ground those planes and they could not fly those planes. they had already taken delivery of them and were beginning to pay for them, and they were now no longer able to make money from those planes. And the way the airline industry works is it's a massive upfront investment to purchase a new airplane, and that cost is recuperated over the useful life of that aircraft. It's very similar to the construction industry where in order to be an excavator, you have to spend hundreds of thousands of dollars on equipment, but you take out a big loan and you pay for it over the course of the lifetime of that equipment. So American Airlines and other airlines were essentially paying for these aircrafts that were unable to fly, which became a massive cash burn for them. Now, they did have a settlement with Boeing earlier this year where Boeing had to pay out damages to these airlines as a result of not being able to fly these aircrafts, but American Airlines did not disclose the terms of that agreement. So going into the current crisis we are seeing now, the airlines were already bruised as a result of the 737 MAX situation, and the airline hit the hardest from that was actually Southwest Airlines. They were the airline flying the most 737 MAX aircrafts that were required to be grounded. However, American Airlines had also taken delivery of many of these aircrafts themselves, so it hurt pretty much every major airline across the board. And then, obviously, the biggest situation hurting airlines now, why we are seeing the stocks falling massively, is the current pandemic that is spreading throughout the world. So, due to the slowdown of air travel related to this pandemic, American Airlines and other airlines have slashed their flights in a major way to cut down on costs. So American Airlines said they're planning to cut capacity by 70 to 75% in April and 80% in May, and international flights will be cut 90% across those 2 months. And these are cuts like we have never seen before, even when compared to the post-9/11 period when airlines were hurt massively after those terrorist attacks. Now, just how much is this going to end up costing the airlines? Well, nobody knows for sure, but there are some estimates being thrown around. One estimate here comes from the International Air Transportation Association, and they feel that airlines could take a $252 billion hit in 2020 due to the massive travel shutdown. But even before that, we also have to talk about the debt situation with American Airlines, which fills in the details from about 2011 to 2018. Because back in 2011, American Airlines actually entered Chapter 11 bankruptcy, and they ended up emerging from that. So let's cover those details now and talk about whether or not American Airlines is currently at risk for bankruptcy. Now, airlines in general are known for taking on massive amounts of debt, and that is just the nature of this industry. It's extremely expensive to purchase commercial airplanes, and as we mentioned earlier, the cost is recuperated over the useful life of that aircraft. So they take out massive loans, buy these airplanes, and over the next couple of decades, they recuperate those costs by operating flights. Now, beyond that, airlines themselves are in a cyclical industry, which means they are susceptible to the ups and downs of consumer spending. When people have excess money, they love to go travel. They will spend money and they will fly to places and they will take vacations. But as soon as people don't have money, one of the very first things they cut back on is their discretionary spending, including travel. So that hurts this industry to begin with, because when people don't have money, they're not spending money traveling, and these airlines will have lower and lower rates of occupancy on these flights, allowing them to make less and less money. And the last point on this topic here is that airlines themselves are a very low profit margin business. We all know how much we spend on airfare and tickets. It's usually a couple $100 depending on where you are flying, but it's actually staggering how little money these airlines make in terms of the profit per passenger. And according to 2017 figures, American Airlines earned a profit of just $10 per passenger on each of their flights, and the industry average for that period was $18 per passenger. So American Airlines was already on the lower end of the profitability per passenger, largely due to the amount of debt that they were servicing. And now we'll talk about the debt situation here. And in 2011, in the post-Great Recession period, American Airlines ended up going into Chapter 11 bankruptcy filings because of the massive amount of debt that this company had. Because of the Great Recession, people were not spending money on travel, the airlines were hurt, and American Airlines had no choice but to file for bankruptcy. Now, the company didn't go under. They ended up merging with another airline called US Airways, exiting bankruptcy and officially giving them a lifeline. But at the time, the stock was trading as low as $20 per share, and investors who were holding on to that stock were warned that they would likely get entirely wiped out through the bankruptcy proceedings. Now, if a company enters Chapter 11 bankruptcy, it doesn't always mean that shareholders are wiped out. It depends on the situation. It's certainly possible if a company is filing for bankruptcy, if they do end up going bankrupt, shareholders will likely get nothing, as they are last on the list to get paid. However, if they exit the bankruptcy filing, for example, like American Airlines did, it can be a very high risk but profitable move for investors. So it's very risky to hold on to a stock of a company in Chapter 11 or to buy stocks of a company in Chapter 11, but in the case of American Airlines, it ended up paying off in a massive way for investor. Essentially what happened here is they exited Chapter 11 due to that merger, and shares of the old AMR were exchanged for new shares under the symbol AAL, and many investors made out like bandits by purchasing shares in the sub $1 per share range. But even after this merger, American Airlines still has some massive debt problems, and they have more debt than any other major airline out there. So just to compare them here, guys, looking at their long-term debt, American Airlines has $21.5 billion in long-term debt. United Airlines is second with $13.1 billion, Delta Airlines is third with $8.9 billion, and Southwest Airlines has the lowest long-term debt based on major airlines with just $1.8 billion. And the best way to think of it is this, guys. The more debt a company has, the less time they can survive financially because they are servicing or paying down that debt. It's kind of like having a massive mortgage and housing payment versus a very small mortgage or housing payment when you lose your job. If you have lower expenses, you can afford to stay afloat for longer, but if you have massive debt, you can't stay afloat nearly as long. So based on the current debt load of American Airlines, they are in the worst position financially, and based on the current crisis in the airline industry, they have the shortest lifeline before they would again have to look at a bankruptcy type situation. But because of the massive amount of risk, the stock has sold off massively, so essentially you have to look at this as a risk-reward profile. American Airlines has the most debt, so it's the highest risk of going bankrupt, but also the highest potential upside if they make it out of this. Southwest Airlines is on the other end of the spectrum with the lowest amount of debt. They haven't sold off nearly as much, so there's less upside but less potential for that company to go under, and you have to determine if you want to buy an airline stock, where do you want to fall on that risk-reward profile. So before we talk about whether or not I think American Airlines is a buy, the last thing we need to cover here is the bailout of the airline industry. The Senate passed a $50 billion bailout for the airlines a couple of weeks ago, and that includes $25 billion in grants and $25 billion available as loans to airlines to help them stay afloat. And of that $50 billion, American Airlines is expected to get about $12 billion in federal assistance. So based on that lifeline they were given from this bailout, there's no immediate threat of bankruptcy in the next month or two, but beyond that, we can't say that for sure. It all depends on how long the airlines are bleeding money, and as we said, because American Airlines has the most debt, they have the shortest lifeline right now based on this massive cut in travel. So is American Airlines a buy? This is my current opinion, and I am somebody who already owns some shares of this company, and I'll share with you what my position is at the end of the video. So based on the current situation, I would call this 100% a speculation. They could come out of this and do very well, and the shares could triple or quadruple, or they could just as easily go bankrupt and the shares could become worthless. And this is a company that filed for bankruptcy not even 9 years ago. And if you're comfortable with that risk, then this may be a stock that you consider. But if you're looking at the airline stocks and you want a safer option, I would consider Southwest Airlines based on their long-term debt. And again, this all just comes down to where you want to fall on that risk-reward profile, and are you looking to make an investment or a speculation? Now beyond that, as far as the share price goes, we have seen the stock come back down to $10 per share. It seems to be testing its support today, and as of making this video, it fell below $10 per share into the $9 range. So I would say that odds are the stock is going to continue to fall. And right now what we have here is a falling knife that a lot of people have grabbed, myself included. So as far as how low the airline stocks will go, your guess is as good as mine. It has to do with a lot of factors that are entirely out of our control. First of all, how long will the pandemic last? Will there be a second or third wave? Will there be additional airline bailouts or lifelines put in place? And also, after the pandemic ends, are people going to be itching to travel, or are they going to be bruised from the economic fallout and unable to spend money on travel? So there are so many massive unknowns in the airline industry right now, it would be impossible to call a bottom or to tell what is going to happen with the stock. But if you simply look at the share price, they are down about 85% from their 2018 high and 66% from where they were back in February. So if American Airlines stays afloat, I would believe that 5 years from now, we will look back at this and say, this was a good buying opportunity for airline stocks. But again, guys, that is just my opinion. So right now, guys, in my portfolio, which I share publicly on my channel, I do a series where I am building a $100,000 dividend stock portfolio from scratch, and I'll put a card in the corner if you guys want to see that. In that portfolio, I hold both Delta Airlines stock and American Airlines stock, and combined, that makes up 6% of my portfolio, and I've invested about $4,000 in those stocks as a speculation. If I lose all of that money, I'm not concerned about that because it's what I am willing to risk based on my risk-reward comfortability. And right now, because I started buying these stocks a couple of weeks ago, I am down about 40%, and I probably am going to continue to lose money on this investment in the short term, but we will certainly see what happens. So anyways, guys, that is going to wrap up this video. Thank you so much for sticking around to the end. I would love to hear what you guys think about American Airlines down in the comment section below. Are you buying airline stocks? Which ones are you looking at? Let me know what you guys think. And one more thing I want to mention here, guys. If you are interested in getting 2 free stocks, Webull has a promotion going on right now where if you sign up for a brokerage account with them, you will get a free stock just for signing up. Then if you fund the account with $100 or more, you will get a second free stock. So if you guys want 2 free stocks just for signing up and funding with $100, that's going to be the top link down in the description below. But thank you guys so much for watching. Subscribe and hit that bell if you haven't already. That way you don't miss out on any future uploads. And I will see you in the next video.